Good day, everybody. Brian here, Quant Labs Net. Today is November 1st, 2025. I'm going to talk about some of the things that have been going on for the last week. Just want to talk about specific strategies from a prior video I put up, I believe, 2 days ago, yesterday. And I'm going to show you some of the coded up by AI instruments along with their strategies that have been found from the different things that AI again has generated that says these are the most popular type of strategies. So the video I'm referring to is this one right here. I put up 1 day ago, and this is on my YouTube channel. Exposed how secret algorithms steal billions from retail traders. And there was some exposure of coding and trading logic from Citadel, Jump Trading, and other big firms and their tactics, which is kind of on the area of borderline of legality. But just watch the video to know what I mean. Anyways, so I'm going to show you some of those strategies coded up by AI, which is, as I said in this video, that can be done. So I'm going to spend time there doing that. First thing is just want to show when it comes to futures trading, based around the Chicago Mercantile Exchange, we have to understand everything's based around volume. Okay. So what I did yesterday is I took a snapshot from bar chart on the most active traded futures contracts. And again, I show how in that video where that comes from. But here are the top traded in normal conditions, New York open, Chicago open markets. Okay. And this is on a Friday afternoon around 3 o'clock. So what was leading was NASDAQ 100 micro, 10-year keynote. So I'm going to show both there. S&P 500. Now I'm going to show you just the normal S&P as close as I can. There's also the micro. Then we have the 5-year T-note, 2-year T-note, and the different durations. Then you have the NASDAQ as well. Okay. So I'll show you that. Can't remember which one it is, but there's an S&P 500. Then we get into the different durations of Treasury. But I'm just going to show you the 10-year. And then we get into here. I think I've shown in a separate video crude oil, T-bond, ultra T-bond. I've not looked at. I've also got a micro gold. I'm going to show you in this video. Natural gas I've not considered. I was going to look at corn as well. And then we get into different durations. The Russell 2000 I'm not looking at. But I will look at the end both euro and you can see soybean. But I'm going to show you both the euro and the Japanese yen because I've covered that in that prior video. So I'll show you those different strategies and the results as well. So everything I'm going to show you is 100% generated by AI. Again, by what I usually tell people, the most advanced AI out there. And as I keep saying, the easiest way I'm using this these are Streamlit apps that are part of a web front, open source web front for Python. So let's get to that. So again, these are going to be part of my Quant Elite programming. I'll be making all this code available for them. Just so you know, until the end of November, I'll have a Black Friday deeply discount, so take advantage of that. But what I'm referring to here is if you go into and you get access to go in the Quant Leap programming group, all of these strategies can be found here that I'm talking about, all these different ones at the time of creating these two videos. So you can go in there and look at the actual coding logic and all that. But now we're going to look at the coding results. As I said, the code will be posted in the file share for the appropriate Quant Leap group as well. So let's get this started. All right, so here are the different Streamlit apps, all in Python. So remember, this is all in conjunction coming from how these high frequency trading shops trade and the hedge funds and all the big names that you know. So the first one we're going to look at is the most popular one. So this is quite interesting, some of the things that it unveiled. So this is the first one we're going to look at. This is the EF futures. These are normal ES. So these are specific for code. And this is what we're going to look at is actual real world data. So this data came in from Thursday, so 2 days ago. So in this case, this is the ES, and this is about minute data. I think it'll go far back three weeks worth. But you'll see here that the file's been loaded. 24,000 data points is it works. So it's been loaded in now. So in here, every just so you know, every time I run a separate prompt for each of these, every application in the streamlet will look totally different. But the prompt itself, the structure of the prompt itself is identical, and it's also feeding in all that content for each of those posts that you can find in the group for the appropriate futures contracts. So in this case, it said it's for ES. So in here, we've got the different strategies. All here, there's about 10 of them. Shadow pool infiltrator, ML predictor, roll compression. These are all as best as the AI can generate as close to the logic that I give it. And if you look at those posts, they're quite detailed. So a lot of the detail and the data is not available. So it's going to try to rebuild that based on that data. So it's not going to be 100%, but the purpose of it, it's everything's all equal, all isn't constant. So you'll be able to get an idea of what strategy works best for all of these demos I'm going to show you. So our first one is to um, compare all strategies. And again, this is all created by the AI. This is like there's people out there that think that AI doesn't work. Okay, well, this is just fake. You know what I mean? So in here, we've got all the different strategies. So all the strategies are explained here, what they are um, roughly. But this is important to know. Okay, this can be said for everything that I'm about to show you, for every instrument. So these are simplified simulations of very complex strategies that in reality require nanosecond execution, co-location within the exchange, full market depth, cross-asset data feeds. And again, I've talked about those in that video with the CME proprietary feeds that are part of when you get co-located within in this case, CME, and then the FPGA custom hardware. Okay. So if I was to execute this, now just so you know, this is a very expensive process. Okay. To run these to run these scans on the prompting to generate these kind of Streamlit apps, you got to go through probably up to 5 or 6 iterations to debug it, build the code base. There are quite literally people out there that say AI don't work. And what blows my mind is that they'll say, "Well, I'm using the free edition, or I'm using some uh, edition of the LLM that's like 3 months old," and they'll come back and say AI is garbage. Well, it's you are the person that's the problem because you're not willing to spend the money to get the highest, latest LLM. Okay, because each iteration of those LLMs and each uh, provider, if it's Claude, if it's GPT, Chat GPT, each iteration gets significantly more. But it comes to scanning, all of that becomes very expensive. Okay, so we'll let this run as best as we can. I can only talk about so much. So here you're going to see the HFT stuff that I've talked about, order flow toxicity, um, average volatility, quote intensity. So these are all high frequency traded internal lingo. And again, that's from the AI, okay? Because there's so much historical data sets out there from that. And one of the things that people need to understand when it comes to this is I have built out AI um, built around different real world data. This might take too long to be honest. Uh, let me see here. Okay, what I'm going to do is I'm going to load a different file in because this is so much data. Like there's probably 2.7 meg. That's a lot. Okay, so what I'm going to do is I am going to go, I believe, into a temporary folder here that I have. Let's see here. So I do know I have some information here. Let me just see. It's still running. This could take a while. Let's see here. ES. Yeah, so this is a very smaller subset of data. So blah 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 blah. Okay. Anyways, you know what? I'm gonna just skip that. I believe I can load in synthetic data. So what I'm gonna do here is it's gonna use synthetic data. Um, in this case, just random data. Let's see if that works. Because it comes away with some very interesting data. If not, I'll just move on. Because understand when it comes, ES is the most popular uh, instrument out there that's traded. Um, so depending upon the data itself can be a problem. So let's see here. Yeah, this could be a while. So let me terminate this and go after stuff that I know works, and I'll pause the video and come back to this. Okay. So I'm going to go in reverse now, okay? So the first one I'll show you going in reverse. And one thing I'll mention here is I've uh, purposely left out Bitcoin and Ethereum because they're not coming up my scans as the highest momentum because of the volatility, and it's unpredictable volatility. We could hit in the crypto winter. So right now I'm going to do a separate process for both Ethereum and Bitcoin. What I will tell you is Ethereum right now trades more than Bitcoin. So just leave it at that. So let me just pull up the next application, which I'll do the Euro because I just got that running. So this is Euro ET. Uh, so this one I know that works. So this is now Euro. As far as I know, the Japanese yen's a little more traded, but this would be interesting. So let me try this here for this data set here. Okay, so we're looking at 6E, the symbol. Okay, so there it is. So if you watch that video on specifically on the euro, you will notice that we have all of these different strategies. Okay, so I can run the back test, and here's the results. So this is going back maybe 3 weeks of data roughly on a minute basis because we're trying to mimic as best as we can on the low frequency, high frequency data. So these are the returns. So we have here something called a P wave gamma scalp over this time period over 3 weeks. We would have gotten 11% return. Now this is without any leverage. Okay, so we have here a Sharpe ratio of 0.545. Volatility is really low. It's okay. Win ratio is fairly low. But we get a return of 11%. And we have this Lagarde bluff loop, 3.47. This other one, 1.15. Here we have the Earth mode latency at 9.98. And again, if you want to know about those particular strategies, then just go watch that video that I just mentioned earlier. So if I look at the performance comparison, we see here um, the highest, the highest Uh, um, the highest Sharp that we can get is pretty killer right here at 5.18. Okay, now remember, this is real data over the last 3 weeks, futures data. So out of that, you know right there, that's probably the best strategy to go with for this data set and moving forward. And again, the win ratio is pretty good. The volatility is lower, so it's not bad. um, and let's check it out. See here, you see here we have Earth mode, total return by strategy. So this Earth mode latency one looks pretty good. Now, again, if you want to know the logic, yeah, watch that video. Okay, so that's from my point of view, that's probably what I go with. Um, so here we have the individual strategy analysis. Okay, so we have all the charting available now for the P wave. Okay, return to strict distribution. These are the signals that get generated. Blah 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 blah. Okay, so let's take a look at the advanced metrics here. So we could do here Monte Carlo simulation. Again, I didn't ask for that. Okay, so um, just one of the nice features that, yeah, we'll say, oh, this person wants this type of application. Let's throw in these extra features, and they're really good to have. So at the end of the day, let's take a look at Earth market, um, Earth mode latency. So we're starting here day one, and we're getting about 10% return. Now, for 10% return over a short period of time, that's pretty good without latency. That's really good, in fact. So here's our return distribution. Uh, Again, this one probably particularly has a lot of trading going on, like in the thousands per transaction. Okay, so here we have the rolling sharp. That's pretty strong. Okay, so here's our recent uh, strategies here, or the trading log. So let's check out the advanced metric. Um, Profit factor of 3, that's pretty strong. So here we can run the different Monte Carlo. I'm not going to do that. I didn't ask for it. I could. So again, I'll provide that source code for that. So that's a good strategy to go with for Euro uh, in the CME. Uh, that probably might work. I don't know. I have to look at the code, but I'm just saying from a high level, that might work from a high level trade on the minute. Blah blah blah. Okay, so let's take a look at the next one, which would be the yen. Yeah, so it's this one. Okay, so this is the yen 6J. Okay, so here, uh, let's try out the data again, see if we can get a fast execution on this. So, yeah, so I loaded the appropriate file. Okay, so you can see here current price, annual volatility, well, that's very low. Looks like it's still running. Yeah, it's still running here. So again, we might have the same problem with these big data sets. Again, I can go back to using the sample data sets as well. Just to, so here we have, what's the strategies that we have here? I guess it'll show up once it's run the analysis here. Okay, let me do this. So I'm going to stop that. So now we are going to go in and generate sample data. Just go through the same process. Okay. So we can generate the data. Cool. Now what do I do? Okay. So you can tell I'm not done this one. There's probably another way to go around this. So what I can do, let me just try this. This might be a bug from AI, I don't know. But just remember the EU one demo I've shown you is 100% real. Okay, so how do I go beyond this? AI didn't do a very good job. Uh, Generate sample data, sample generate and begin, re-upload, begin. Oh, I see. So I have to download the data. So where does the data go? Will automatically standardize minimum price. So I've done that. Now let me think here. Where will the data go? So where's my data? Okay. The data is where? Huh. I don't know where that data went. Okay. Um, let's see here. If I go um 6J, so I can tell you that might not be so bad. I'll try running this. Okay. So yeah, it looks like it ran it. Okay. Let's see. Okay, cool. All right. So you can see what's been going on here for July. The here's the different strategies right here. So again, these are using the same technique as what I've explained before with the euro. It's all these different HFT related strategies. So we got VAT, gamma. So here's the combined HFT strategy. So you can go from 1 to a 15% return. That's pretty incredible, actually, for uh for um for for a combined set of strategies. That's really good return. So here, our P wave gamma seems to, oh, actually the VAT gamma seems to be the right one to go with. So we got annual return 9.5%, volatility. Uh, or do I go with this or this? Because the volatility is much lower with the P wave gamma. Sharp ratio is negative. This one's higher. The Sortino max drawdown, not bad. Let me just try playing with this. So you can see here, this is the interesting one. If this is true, again, this is just AI. If this is true for the VAT gamma, um, I will tell you that's a pretty good win ratio if it's true. So here's what it's kind of doing. UK VAT at 20% creates a skew. Then there becomes a London COMEX volatility arbitrage and take zero point 0.8 volatility capture opportunity. So maybe that's how it works. Is it's like it's doing like a gamma capture of some kind or extraction. All right, so that's performance overall, those different strategies. So let's check out the strategy comparison. So where's our buy and hold, if we can find our buy and hold. But this one combined looks good. Um, the MA crossover, I guess buy and hold would be in green. Oh, these are just using sorry, technical analysis. So again, these are total returns for using classic technical analysis. Okay, so if we use Bollinger Bands as part of the trading, we get annual return 0.64, buy and hold 0.36. Okay, so that's the technical analysis view. If I'm not mistaken, portfolio analysis. So it's kind of comparing between the difference between uh, the different buy and hold. If you did buy and hold, this is what you'd get over the last, I believe, a year. Yeah, so this is since October 2024. So this is the standard return you would get from just doing a buy and hold. Okay, so here's your portfolio metrics: win ratio 0.4, 48%. That's pretty good actually. I think Bollinger. If we just did Bollinger with technical analysis, let's see what that would be. Again, this is on yen over the last year. Okay, so you can see here we got lots of drawdowns in July, uh, quite a few in September. Okay, so here's the returns. So we do have some rolling risk here. The volatility just drops off as of June this year to going lower. It looks like in September. So we got winning trades, 50% win ratio. Now, I don't know. Obviously, the best one to go with out of this is this VAT gamma swap. I'd have to really dig into it. But just to give you a comparison between buy and hold, technical analysis using the same data set, what kind of expectation can we learn from all of this? Okay. So yeah, and this is a very low volatile instrument. So the thing here is that if we do have all kinds of bad things happen in the economy, stock market crashes, usually yen will be one of the ones traded, USD, Japanese yen, because it's a carry trade. It's a safe trade. As long as the Bank of Japan doesn't intervene on their interest rates, they could do it anytime. And that could also be said the same thing on the euro as well. Okay, so we have that, which is all good. So talking about the defensive, let's check out what the micro gold will be. Okay. So my question from October 21st, when gold took a big dip, a lot of people think, oh, it's just people selling off gold. Other people saying, no, 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 no. This is what we call, no, I call them operations now from central banks, from the government itself. I don't know. But from what I've seen in the AI, what it's telling me, it was some kind of operation to tell people don't put money into gold because we want to scare you in the gold trade. When you have like in Australia, 2 mile, 2 kilometer long um, crowds, lines of people wanting their gold or buy physical gold, yeah, that's what people want to do. And I had a couple of people say they're trying to buy gold as well, and they couldn't buy gold, physical gold. So, do we use the sample data? Let me try real data, just as an example here. If not, I'll just go with this the sample data. Okay, so we're looking for MGC here. MGC, uh, MGC. This does not exist in this data set. Let's see here. Maybe here. This is from 2 days ago. It's the most recent data. Let's see if I can load it. This should actually load 1.5, should be okay. Loaded 13,000 rows. Okay, so this is where it gets very interesting. These strategies that I've talked about are what they call shadow market strategies. Okay, so these are the unknown strategies that the public don't know about. These are, as I said from that video, these are extracted via AI. The deeper, darkest depths of Chinese AI that I use, that I don't tell people on to get these type of strategies. So what we're looking at here in microstructure, which is the low latency stuff, we got ghost tick, latency loop, expiry, cluster bomb, Vanna Volga, Vampire, Midnight Rebate, Harvesting. I don't come up with these names. These are named by the AI, okay? Just to let people know that. We have here esoteric signaling, uh, Ionospheric Ghoul Proxy, as an example, that's watching the mines and the smoke coming out of the mines. Believe it or not, this is the one that enables when one firm infiltrated the vault flow and infiltrated the iris scans. And when people are going uh, in and out of vaults, gold vaults. Here's one for tracking Reddit. So here we got some arbitrage one. This is taking advantage between the Chicago transfers of gold and the London transfers of gold. I think Switzerland's involved there. And then there's fakery ETF creation loophole. So again, I don't name these. This one's a quantum computing one. So here, I just don't have the data. Qubit, Quanto, Satellite, Gamma, Blockchain, Oracles. At least the AI is smart enough to say, yeah, we can't replicate these particular ones because we don't have the proper data. So When it's just coming soon, it's not going to happen because I don't have access to the data, nor will I subscribe to it. It's very expensive. But we have enough here to work with. So let me just put these three in for now. Or let me do one. Yeah, let me do one just to minimize the time it takes to do this. So here's our specs on the contract size 10 ounce, tick size, 0.10 times the margin, uh, 1800 liquidity, less than 3% of the GC price. Let's go. So here it's already done it. Wow. Okay. Um, so this is the type of data we get. Again, this charting is going to be high frequency trading level stats that you wouldn't get through a traditional trading platform. Okay, you just won't get it. But if you were to look at a 1 minute data for these particular strategies that are built by the AI, suggested by the AI, and how these firms trade, this is the kind of probably charting they'll look at and dashboard they'll look at. So you can see here, depending upon gold, that the drawdowns drop down, and you can see why. It's because that would just recently happen and still dropping. Personally, I think that's manipulated. That's fakery. We have here a monthly heat map, date time showing period performance instead. Okay, so these drawdowns are because of what happened last week on the 21st of October. So that's pretty good, actually. Okay, so I'm going to add in the other ones here. Let's see here. Uh, let's see how fast this takes. Ooh, that's fast. Okay, so we have here, these are now shadow market strategies. You can see here that a lot of these strategies are not very good. They're all negative. And again, this is using high frequency data. So there might be times when to run certain strategies when gold's going up and has consistently gone up. But since last week on the 21st, 23rd, um, we've had this. Let me just show you what I mean here in gold. Okay, so if I go to Yahoo Finance, okay, and I show you gold, okay, so let me just try this symbol name, or in fact, yeah, let me pull up the whatever it comes up with. Actually, MGC, yeah, let's just go with this one, Standard Gold. Yeah, so I want to show this charting, or maybe better just to do gold GLD. Okay, here we go. So what I mean by, oh man, I really starting to despise Yahoo Finance over this. Uh, okay, I think it's pulling up the future. Wow, yeah, GLD. Okay, so let's go with that. Little spider. Okay, so I believe we have this something loaded in. This is the future. So if I was to look at a 6 month, what I'm referring to is right here. So when you look at October in around the 21st, this drop here from 4,300 to 3,900, that's a 10% drop, and it yet has not recovered. So you're starting to see this reflected in these charts. So here, this is your buy and hold, this dashed line. Okay. So all of these HFT shadow strategies definitely are not working. Okay. So let me get rid of these, or better yet, I'll go under here under the esoteric. So let me just try. It looks pretty fast. Let's see what happens here. So these are different, the HFT related. Yeah, these are horrible. Very horrible. So buy and hold, don't work on any of these. So the one thing I want people to take away here is you can clearly see that these strategies may not work from a high level, but they're all negative. This one's not so bad, this ionospheric,
but they're definitely not being the high and low. So gold here is not going to work. Let's see, just see if it doesn't. So yeah, so a lot of these are not worthwhile. This gold, so that's a dud. Okay, so these particular strategies are just not gonna work. Okay, um, so let's start looking at the other ones here. So let's take a look at the Treasury. Okay, the Treasury is pretty good. I'm kind of surprised by this one. So this is a 10-year Treasury futures. Okay, there's multiple durations, but this is probably the most traded out there. Okay, let's check it out. So again, these are specific strategies that the uh, HFT firms use. Okay, and let's see what we get here. So we're going to look for TN right here. That's pretty good. That's pretty small actually. So we got 10,800 rows. So here's our strategy types right here. We've got the gamma ray, the DVO1, CTD Oracle, yield curve synthetic, volatility surface arbitrage, action sniper, Fedwire latency arb. This is the zero DTE gamma trap and quantum combined. Okay, so we've got our data loaded. So let's see how long it takes to load the data and do the back test. Oh, voila, we have an error. Let's see if I can still work with this. Let's see. Nope, 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 nope. Okay, let's try. Let me reload it and just do the sample data if that works. Let's try. Yeah, just work with the data or generate the synthetic data, simulated data. So we'll just generate synthetic data. Okay. From the back test, will this work? Okay, there we go. So this is from 5 years. Okay. So you can see here that buy and hold synthetically dropped from about 20%. I don't know if that's true or not, but let me figure that out and confirm that on Yahoo Finance. So if I look up TN or TLT might be a good one. So let's see last 5 years. Let's say all. So did in fact the TN drop five was it 20%? Uh, so yeah, it dropped. It dropped quite a bit. So it dropped more than half. So let's go with that. Okay, let's just assume that that's the case. So here we have a buy and hold. Obviously, that's somewhat true. But you can see here the gamma ray didn't do all that great. Okay, so let's take a look at the strategy comparison to see how this did. Okay, so this is kind of trying to be as close as possible. So here's the interesting thing. We have something called the gamma ray strategy. That one did well. So that would have given you 20%. Well, actually, that would have started taking off in since 2022. That would have given you a nice 20% in Treasury. That's really good because you're dealing with a very safe instrument until the U.S. government decides to get either defaults or because of the national debt and whatnot. So here's a gamma raid. Uh, Volatility is very low. Sharp ratio not that great. This one, the volatility surface arbitrage might be the better one because of the sharp ratio. Volatility is fairly low still there. Annual return 3.3% is okay. Total return 25%. So maybe I looked at the wrong one here. Uh, so max drawdown, that's pretty good. That's very low risk. A strategy that gives you negative 6.3, that's pretty good. Win ratio of 51%, profit factor 1.15. So which one is that? Oh, I see. Yeah, this is the volatility. I'm sorry. So that was the volatility arbitrage, volatility surface arbitrage right there in green. Okay, my eyes are not as good as they used to be. I need more carrots. Okay, so knowing that we have here this quantum combined strategy at 96%, we know that that is probably not a very good one. So if you were to trade all of these strategies combined, not very good. Okay. Let's see if we can look at an individual level. No, we can't. So again, this is part of the AI, what it gives you. So this is really not that great. So let's check out if I was to just focus on that volatility surface arbitrage. I'm going to assume it's already gets loaded here. Volatility surface. We'll just see if gamma ray, does that change? No. Oh, there it is. Okay, let's load that in. So it does load in. Okay, so this is the volatility surface. Looking pretty good there. Um, Very low risk. Daily return, 0.05%. I mean, this is not bad. Okay, so these are the different scenarios. If you have a stress test, obviously this is hallucinating. Uh, this is not too bad. But the question is, if we have a flash crash or a volatility spike or a liquidity crisis, very low risk here with this strategy, and it does very well based upon the simulated data. Here's a trading log. Okay, so let's see if we can get um, our strategy defined. Looks like I can't find that. Okay, so if you want to know what this strategy involves, all I can say is watch that video I mentioned earlier on the TN. This is a good strategy to go with. I would think very low risk, and it performs pretty good. So it might be actually, from what I'm seeing out of all these quote unquote HFT uh, strategies for gold, this is better to go with on the Treasury. Just saying, and or the some of the either Euro or Japanese, right? So let's break that. Okay, so we're going to get into the more advanced. Oh, yeah, let's do this one. This is that. Now I'm going to look at the Dow Jones Industrial Average. From what the AI told me, most uh, high frequency term, high frequency trading firms prefer to trade in um, the Dow Jones because the drawdown risk on certain stocks are much lower in the Dow Jones. So if you compare that versus the NASDAQ, the drawdowns are much higher risk when the market has a drawdown. So from what the AI told me, it says that despite the volume, despite the liquidity, and they want to trade in the equity space, yeah, they would, or the index space, U.S. market index space, that did trade in the Dow Jones. So let's try this for the Dow Jones, the YM. Um, so we've got the top three market indices here. So I'm hoping we can show you some really cool. So here we have the different strategies, all of these different, we have machine learning, technical strategies, option strategies, gamma strategies, and microstructure. So we have tick size gaming, quote stuffing detection, latency arbitrage, and it's the same conditions as said before. These are simplified demos, purely on price. We don't have the data to be able to do things like watching dark flow and things like that. So let me choose another gamma strategy. So here we have a variety of different strategies. Okay. So again, I gotta keep reminding people, yeah, this is just for demonstration purposes. Uh, so I'm gonna try to load in. Hopefully this will work. It should. Um,
Let's see where they are. YM. Let's see if this works. Yeah, some of this needs to be updated because of of the evolution of how these Streamlit apps were created. So I'm gonna have to generate the sample data again. Um, so we'll go with that. So it's generating the data for us. Um, so we have some options here. Let's check out. So here's our portfolio analysis. Oh, I see. So we have to run a strategy first. So let's say we want to try out order flow imbalance. Oh, I see. Yeah, that's right. We can check out all of these at once. I forgot about that. So out of that, we can run the comparison of all those in the microstructure strategy level. So it takes a while. It just ran. So here's our results. So total return, usually you want to go with the higher Sharpe ratio. Um, Max drawdown. Again, I don't know if this is, I'm just going to show this for demonstration purposes. Okay, I can easily correct these for my needs. Um, and what I'm going to do is, depending upon what I want to trade and the cost, um, I'd probably, with the account size, I'll probably tailor it for my needs. As I said, anyone interested in this can get a code and tailor it for their own needs uh, as well. Just got to be join the Quant Lead membership. Okay, so here's our equity curve. Um, so the only one that seems to be working is tick size gamma. Everything else has gone negative. So if we were to start at last year, again, simulated, if we started at July last year from, I believe it was starting at 1 million, we'd be up 10 time return. Again, I don't know if that's the case. So that's using this one right here. I think it was a tick, yeah, tick size gaming. Okay, so tick size gaming model. Medal. Okay, so that's the overall equity curve. But here we have a lot of risk here with the drawdown. That might not be the best. So here we've got this quote stuffing. We'd be still up pretty good. We would double our money. Obviously, tick a quote stuffing's not going to work. The or sorry, tick size gaming quote stuffing and order flow. Um, so we have a latency arbitrage here as well. So yeah, you really got to know your volatility and all that. Okay, here I think, yeah, here we can add in all of the other strategies. So let's do that. Okay, so we are going to add in everything on this. So I'm just kind of like a wild animal. So these are the different option strategies we can apply for this set. Technical strategies, mean reversion. This will look like a mess as we compare it. But again, this is just for demonstration purposes. And then again, we have our machine learning, LSTM ensemble. So it's on the same data set. Okay, so I guess we can run. How do we do this? Yeah, I don't know. I don't see a run button here. Okay, anyways, minus that. Okay, so singles back test here. So let's go to the gamma strategies, and I believe let's just do that. Well, most people probably want to know the zero TTE gamma scalping. Just so everybody knows, if you were to learn about the next set of regulation coming from NASDAQ and all that, be aware that they're probably going to ban zero DTE strategies. That's what the AI told me. Here, hang on. So looks like I have to So I'm trying to understand this. Oh, I see. Run comparison. Yeah, okay. Missed that. So let's run the comparison, running it. Again, this is simulated data. I can load in real world data and just debug it to get it working. Aha. So here we go. So here's our overall strategy ranking. Um, let's see here. So average rank. I'm not sure what I'm supposed to take away from that. So here we got it's a higher better. So it looks like traditionally the LSTM prediction can be pretty good. Straddle. Oh, it got even better. RSI divergence, quote stuffing detection. So it does get more. Order flow and balance, iron condor, zero DDE, gelt. So if I was to focus on the different best performing strategies, I'd probably go with these three. These might be higher risk, but let me just see if there's a metric we can look at on that portfolio analysis. Okay, so I guess we could load in all these different ones. Let me do that. We have no more. I just go with the default just so everybody knows. I find this is very interesting because um, I can kind of do what I'm doing and just pretend. So let's do the analyze portfolio business. So, oh, yeah, we got an error. This is unknown. This is all new to me. So there's a bug in there. So again, I can debug it if I'm really interested in this particular uh, this particular instrument, which is the Dow Jones. And to be honest, it looks pretty good. But I just go through more analysis on, so that's not a problem at my end. Okay, let's go to the next one. Hopefully these will work. The next one we have is just to show you is the NASDAQ. So let's load in that one. This might be a little less sophisticated with what I want to show you. Uh, I just want to show you how sophisticated this can be because it's to me it's impressive that AI can do this where you feed it um, data and then you can see which ones perform better. Okay, uh, that's the amazing thing about this. So as you can see here, as is built around simulated data right here. Okay, so here we got a bunch of strategies again. So again, these are fed in from how the AI, based upon what AI told me, what the biggest trading firms are using. And as I said, I just use everything because I can compare which one's going to give me the best. So I'm just going to show you um, built around this. Okay. So do I how? So you can see here, I just loaded in this dark wave microwave strategy, right? Um, yeah, it's not very good. Okay, let's see. Strategy detail. So here's all the detail explained. Um, I don't know if it loads in. Oh, I think it loads in everything. Okay, cool. Okay, so this is pretty good. So here's all the strategies I've loaded in. So again, some of these strategies are going to work, not going to work. Again, based upon the simulated data. Okay, we're just kind of like looking at what the best strategy is that HFT firms use based upon uh, what the AI told me and how a lot of these trading firms do it. So you can see here, this is your buy and hold the dash line. So that might be pretty typical. So this has gone back a year now, 2024. So you can see here, we're dealing with zero DTE gamma scalping. boom, that might be your best bet. At one time, you have a combined ML ensemble, and everything else sucks. So maybe the zero DTE scalping is the best one. So let's try to understand that. Um, so let's see here. There's so many options that this AI thing can give you. It's crazy. Okay, so again, if I have here the advanced risk metric. So if I was to look at the zero DTE, the variance, conditional variance, slightly negative. So here's the description. So if I was to do the zero DTE, so this is the word that a lot of HFT uses: harvesting, extracting, accelerated theta decay in daily options. So 0.09% per contract per minute decay in the final 2 hours. Premium collection from retail. So it sounds like you're going to sell options. Okay, you're going to write an option and you're going to get an income from it. And you're going to profit here mostly as the time decay in the last 2 hours. Now, to me, that's very high risk. Okay. But if I was to focus on that, um, maybe I could take a look at it or not. I personally wouldn't go with a strategy like that where you're writing options. It's just too high risk to me. But here you can analyze it and see that maybe that might be the best one. I don't know. But um, it's a pretty good return. 81%. That kind of makes sense to me. But here's this combined ML ensemble, and then the only other and rain scatter predictor. Let's see what those are. So let's check out the rain scatter predictor. Monitors 5G signal attenuation from rain to predict retail order burst. I believe that would be if it's raining. That's how sophisticated this thing is. If it's going to rain, there's going to be more people indoors, and therefore they're going to trade more, assuming. 11-second prediction window with 0.81 correlation, front runs retail flow burst. We're not going to do that because we're not in the data centers of the CME. We're not co-located. The other one that came out again, let's see the other one. So the next, oh yeah, was the ML ensemble. So we can find that one. BTC, yeah, right here. So the combined ML ensemble, which was pretty good. So it's an ensemble of all strategies, dynamic weight allocation on market regime, edge diversification adaptation. So this is a very good one actually, because this one will self-adapt using machine learning, and you get a pretty nice return. But here's the problem. It has some kind of crazy drawdown in October. So somewhere it broke down, but there's going to be conditions where you're going to get a really nice spike, 1.8% return. So I don't know. I'll let you decide if that's something you would go with. But not too bad. So again, these are just for demonstration purposes. This is again using the simulated data. Okay, so let's get out of that. Now you're going to see some very sophisticated high frequency trading statistics, as I've shown you before. The next one we'll go with is, so we've done the NASDAQ. So let's go with this one and try to use the simulated data. There should be an option for that. But hopefully you can see the value of this. This is why, with this type of analysis, this is why things get more expensive, because of kind of bringing this type of value to as a proposition. It's rare. I don't think it exists. So this is where it gets where you get to see the real high frequency trading data statistics, because out of everything that's traded out there in the futures market, ES is the number one. Okay, and E-mini as well. Okay, so let's use the synthetic data. Okay,
So here we're simulated time frame from October 21st of of October till now, which is now November 1st, so the last 30 days. Okay, so here we have all these different core strategies, shadow market strategies. Very important to know on this type of analysis and what I've already shown you. I've already gone through that. Okay, so um, let's see where we can. Okay, so we're going to execute. So we have all these different strategies we can go through. So we have a single strategy deep dive, pair all strategies. Okay, so what are we looking at? All these strategies available, I assume. And then we can do the shadow analysis, but we're using simulated data. So let's see how fast this is. Um, this might take a while. I might have to make this as a different part. I, Here's the problem. Let me show you what's going on here. If I was to use real world data, um, I can show you some of the data here. Okay, so here you can see some of the data is very small right here, but as you get into, actually, sorry. So I've shown this before in one of my webinars. Okay, so when you start to look at CME silver, 100, 1.85 meg, okay, then you get into the NASDAQ, 2.9. But when you start to look at the ES, you can see the ES starts to kind of get more and more. And there's more analysis done as well. Okay. So this is why it's much slower. It's still running. And the data, the amount of data it captures or crunches through is a lot. So let me stop this video and let it and run a real world example. I think it could take a while, so I'll come back. Good day, everybody. Okay, so we have now run this so-called analysis on statistical synthetic data um, on the S&P E-mini, and these are the results of that analysis. So we're only looking at right now comparing all applicable strategies, and these are all right here, and there's so many of them. Okay. Uh, these are the stats I want to talk about when it came to high frequency trading. So this is the average spread among all the ticks, quote intensity, order flow and toxicity. I've talked about that in the past. Now this could be hallucinated for all I know. Average volatility, which is fairly low. Um, so here's all the different strategies. I'm not going to go into those. As I said before, if you're interested, just watch that video. You can see here all the different metrics that come with it. The correlation among all the strategies, um, and there's a lot here. Okay, I'm not going to go into the details of it, and this is not including the shadow market analysis as well. So this is somewhat we might be able to get off of your price. Uh, Maybe we may not need third-party uh, data feeds from, let's say, the CME. I can't remember. I don't know them all. This could be some of them could be hallucinated. But I just want to show you the kind of data you can get from this in a decent dashboard. So here we've got these different strategies that are giving a decent return, like pretty good of equity curves. I don't know if it's 8 times or percentage. We can see here, uh, it's just so much data here. I'm not even sure how to work with this. So here we have a Sharpe ratio right here. And then we have here based upon total return. So we have here order flow toxicity as a strategy that does well, implied order flow as well, and the Vanna-Charm Exploit. Those are the top three. And the returns are just kind of hallucinated. But again, it just gives you an idea what could be potential and just use the AI for these particular strategies to dig, and trim it all down, maybe into a new dashboard, work off the real data, and just extract and get better results with these higher performers. So have your this is obviously hallucinated the data, but we have here most likely order flow toxicity strategy might be the best for risk adjusted. Maybe it is the order flow, and the best profit factor. Again, here you got infinity, gamma, scalping, 0TE. So these are the different strategies involved. Again, same notes as before with the NASDAQ. So again, these are simplified, okay? Nano execution. So we don't have proper data here to work with. This is all based upon nano execution. This is assuming you're co-located in an exchange, full market depth. I remember in that last video I talked about is 200 levels, cross asset data feeds, and FPGA with the custom hardware uh, embedded for these type of strategies. Okay, so the best ones we're dealing with here are order flow toxicity, phase toxic flow using VPIN like metrics. So I kind of go over that in that last uh, video that I highlighted. The Vanna-Charm Exploit trade second order Greek effects. That might be possible to trade at retail, or not retail, but without the third party data feeds. So that might be an opportunity there. And the next one that looked pretty good was this one, which was the implied order flow. So let's look at what that involves as well. So the implied order flow, what one's that? So we have here implied order flow front runs, which I'm not going to get involved with. Front runs delta hedging from option activity. Okay, so out of those three, I would think this Vanna Charm exploit might be an opportunity because that's maybe just maybe the retail crowd has access to without, as I said, that third party data. Now, remember when I talked about the shadow market technique? So I'm gonna run that analysis next. But these are involving phantom orders, layering at different price levels to create false depth. So from what the AI told me and what if you watch that video, what's illegal is spoofing and quote stuffing. Okay. So those are illegal. The thing AI said layering's okay. I don't know. So here again, this is using true high frequency trading in the data center, co-located, also with the very nanosecond type of data, 300 level. So these are the kind of strategies we can run. Okay, phantom order, layering, spoofing, IOI sniffing, microstructure noise trading, and cross-venue arbitrage. So generally, cross-venue would be through Singapore for reasons. Watch the video. IOI is indicators of interest as well. Spoofing in detection, identifying fake liquidity via the cancel pattern. So that might be okay as well. So what I'm going to do is I'm going to run that analysis as well. So let's see how long it takes. If it takes too long, I'm just going to pause it and come back. Yep, that's what I'm going to do. See you in a little while. So here we are with the shadow market strategies analyzed. So this is the type of data we get here, and this is very intricate. We can see here over time um, order flow toxicity heat map. Now remember, I didn't ask for this. AI gave this to me. We have latency arbitrage opportunities over each day.
this is simulated data, but I could probably use real world data. We have here gamma exposure and all those different strategies we talked about. We've got dark pool activity signals. Okay. Remember, this is simplified and under the conditions that I mentioned that the AI wants us to remember. Here we have quote stuffing detection. Okay. We have latency arbitrage opportunities. Now, this is, I don't know what time frame this would be, but I could probably feed it 5 megs worth of data on minute data and let it run. I might do that as a separate video, which again would be real world data. And here we have the Vanna-Charm relationship. ML predicted we can't do. Microstructure noise. Okay. All along there, these different data points. And here we have the key shadow stats. Again, I don't know what's hallucinated or not. Order balance in distribution, statistical, quote stuffing, ask average bid ask spread 7.686, and these are the different shadow market techniques we're looking at. And again, these are a reminder of the conditions. We're not providing nanosecond data. We're not looking at we're assuming this data will come from a third party co-located within the exchange with the full market depth as I said at 200. And there's other cross asset data feeds you could use, and the way to run it is on FPGA rig. That's pretty well it. Okay, so if you like this sort of thing, okay, where we're now going into this level, you can always click on the Learn tab at quantlabsnet.com. Get yourself a C++ ebook on HFT and infrastructure for free. We also have, if you're interested, just understanding how we work and analyze more of the traditional futures across all major assets. You can try this out for 7 days as well. Those are the options. Hopefully we'll see you somewhere, somehow. Over and out. Thank you for watching. Good day, everybody. Okay, so we have now run this so-called analysis on statistical synthetic data on the S&P E-mini, and these are the results of that analysis. So we're only looking at right now comparing all applicable strategies, and these are all right here, and there's so many of them. Okay. These are the stats I want to talk about when it came to high frequency trading. So this is the average spread among all the ticks, quote intensity, order flow and toxicity. I've talked about that in the past. Now this could be hallucinated for all I know. Average volatility, which is fairly low. So here's all the different strategies. I'm not going to go into those. As I said before, if you're interested, just watch that video. You can see here all the different metrics that come with it. The correlation among all the strategies. And there's a lot here. Okay. I'm not going to go into the details of it. And this is not including the shadow market analysis as well. So this is somewhat we might be able to get off of pure price. Maybe we may not need third-party data feeds from, let's say, the CME. I can't remember. I don't know them all. This could be, some of them could be hallucinated. But I just want to show you the kind of data you can get from this in a decent dashboard. So here we've got these different strategies that are giving a decent return, like pretty good, of equity curves. I don't know if it's 8 times or percentage. Um, we can see here, uh, there's just so much data here. I'm not even sure how to work with this. So here we have a Sharpe ratio right here. And then we have here based upon total return. So we have here order flow toxicity as a strategy that does well, implied order flow as well, and the Vanna-Charm Exploit. Those are the top three. And the returns are just kind of hallucinated. But again, it just gives you an idea what could be potential and just use the AI for these particular strategies to dig, and trim it all down, maybe into a new dashboard, work off the real data, and just extract and get better results with these higher performers. So have your this is obviously hallucinated the data, um, but we have here most likely order flow toxicity strategy might be the best for risk adjusted. Maybe it is the order flow, and the best profit factor. Again, here you got infinity, gamma, scalping, 0TE. So these are the different strategies involved. Again, same notes as before with the NASDAQ. So again, these are simplified, okay? Nano execution. So we don't have proper data here to work with. This is all based upon nano execution. This is assuming you're co-located in an exchange, full market depth. And remember, in that last video I talked about, is 200 levels, cross asset data feeds, and FPGA with the custom hardware uh, embedded for these type of strategies. Okay, so the best ones we're dealing with here are order flow toxicity, phase toxic flow using VPIN like metrics. So I kind of go over that in that last uh, video that I highlighted. The Vanna-Charm Exploit trade second order Greek effects. That might be possible to trade at retail, or not retail, but without the um, third party data feeds. So that might be an opportunity there. And the next one that looked pretty good was this one, which was the implied order flow. So let's look at what that involves as well. So the implied order flow, what one's that? So we have here implied order flow front runs, which I'm not going to get involved with. Front runs delta hedging from option activity. Okay, so out of those three, I would think this Vanna Charm exploit might be an opportunity because that's maybe the retail crowd has access to without, as I said, that third party data. Now, remember when I talked about the shadow market technique? So I'm gonna run that analysis next. But these are involving phantom orders, layering at different price levels to create false depth. So from what the AI told me and what if you watch that video, what's illegal is spoofing and quote stuffing. Okay. So those are illegal. The thing AI said layering's okay. I don't know. So here again, this is using true high frequency trading in the data center, co-located, also with the very nanosecond type of data, 300 level. So these are the kind of strategies we can run. Okay, phantom order, layering, spoofing, IOI sniffing, microstructure noise trading, and cross venue arbitrage. So generally, cross venue would be through Singapore for reasons. Watch the video. IOI is indicators of interest as well. Spoofing in detection, identifying fake liquidity via the cancel pattern. So that might be okay as well. So what I'm going to do is I'm going to run that analysis as well. So let's see how long it takes. If it takes too long, I'm just going to pause it and come back. Yep, that's what I'm going to do. See you in a little while. So here we are with the shadow market strategies analyzed. So this is the type of data we get here, and this is very intricate. We can see here over time um, order flow toxicity heat map. Now remember, I didn't ask for this. AI gave this to me. We have latency arbitrage opportunities over each day. This is simulated data, but I could probably use real world data. We have here gamma exposure and all those different strategies we talked about. We've got dark pool activity signals. Okay. Remember, this is simplified and under the conditions that I mentioned that the AI wants us to remember. Here we have quote stuffing detection. Okay. We have latency arbitrage opportunities. Now, this is, I don't know what time frame this would be, but I could probably feed it 5 megs worth of data on minute data and let it run. I might do that as a separate video, which again would be real world data. And here we have the Vanna-Charm relationship. ML predicted we can't do. Microstructure noise. Okay. All along there, these different data points. And here we have the key shadow stats. Again, I don't know what's hallucinated or not. Order balance in distribution, statistical, quote stuffing, ask average bid ask spread, 7.68 ticks. And these are the different shadow market techniques we're looking at. And again, these are a reminder of the conditions. We're not providing nanosecond data. We're not uh, looking at we're assuming this data will come from a third party co-located within the exchange with the full market depth as is set at 200. And there's other cross asset data feeds you could use. And the way to run it is on FPGA rig. That's pretty well it. Okay, so if you like this sort of thing, okay, where we're now going into this level, you can always click on the Learn tab at quantlabsnet.com. Get yourself a C++ ebook on HFT and infrastructure for free. We also have, if you're interested, just understanding how we work and analyze more of the traditional futures across all major assets. You can try this out for 7 days as well. Those are the options. Hopefully, we'll see you somewhere, somehow. Over and out. Thank you for watching.